We are always continuing with the SK system strategy after your support for the previous section, in which we discuss the necessary tools to learn the strategy and its settings. Today, we will continue in this episode by discussing very important conditions that beginners in this strategy make mistakes in, which cost them significant losses. We will start first with the most important of these conditions. First, from now on, we will deal with such forms in the market, either in a rising market, as shown, in the most dangerous or bearish market, as shown in red. This is called the SK sequence. It is very important to remember this name. This is one of the technical terms of the strategy. Regarding the SK sequence in this form, we must ask an important question. Is every zigzag or market movement in this form, in the form of an upward wave, a correction, or an upward wave considered an SK sequence? No, this is it. The second condition that we will talk about. Now, the content of the first condition is that when the market moves in this way, an upward wave, then a correction, then an upward wave, this is what we were drawing using the Fibonacci extension. As this point forms point 0 and point A, then I have point B here. From the correction, then I have point C. Okay, the content of the first condition is that it must. The B penetrates point A, meaning point B, as you saw here, exceeded point A with me. Okay, the second thing in this first condition is that this point B must never go down and penetrate this level of point 0. If point B exceeds point 0 with me, this is never considered an SK sequence. And here I will never be able to apply the strategy. I think that these conditions are clear. Also, in the case of a falling market, I have point 0, point A, then the corrective point B, then I have point C, which I want the market to reach. Point A must be penetrated like this from the impulse wave from B. Then point B must never fall below point 0. Point B can descend to the level of point 0. That is, it descends to this level and thus becomes equal to point 0. I think this issue is clear. Okay, how do we find this in the market? We find it in the market quite simply in the form of candles. We'll get into that after we finish the second condition. Okay, now the second condition is the trap that most people fall into, and I want you to focus. In this case, the market is bullish. Okay, I have an uptrend. I have two patterns here. One of these patterns is the SK sequence, which is the correct pattern that I should always notice in the chart before adopting this strategy. How would I determine that? Through bounce. Okay, I have point 0 here. Draw the Fibonacci retracement as we learned in the first episode up to my point. Okay, is this considered an SK sequence? Yes, it is, but why? Because as you can see, point B retraced to its specific correction area. The correction area for this strategy is between 50% and 66%, which we adjusted in episode 1 in the Fibonacci retracement settings. This means point B must be within this level. There is no problem at all if point B goes down from these specific correction areas to point 0, but it must never surpass this level, meaning the level of point 0. I think this second condition is clear now. We will try this form that I have here and make sure whether this is considered a correct SK sequence or not. I draw the Fibonacci retracement as we learned from the bottom to point A. Then we look here, we have an issue. What is this issue? The issue is that point B, where the market is supposed to correct, never reached the required level, which is between 50% and 66.70%. This means that the point must touch at least the 50% level or lower than it, meaning below it. This is in the case of a bull market. Okay, let's now look at a real example of the SK sequence. You can see with me this trade that I entered based on the SK sequence. You can see with me here. I defined point A as point 0. I defined point A and point B. Notice that the first condition is met, which is that point B, which is its own pusher, has penetrated point B, meaning this condition is important. The second condition to verify that this is correct, as we discussed, is by drawing the Fibonacci retracement from point 0 to point A. Do I meet the second condition? Yes, I meet the second condition. As you can see, point B is inside my correction zone from 50% to 66.70%. So this level is correct and my SK sequence is correct. The second step is to draw a Fibonacci extension based on the 3 identified points. This way, we have identified our point C, which is roughly at this level. Now, in a bearish market, I take my Fibonacci retracement after identifying the waves like this. Alright, in the cases of a downward market, I draw the Fibonacci retracement from top to bottom at point A. The question now is this considered a correct SK sequence? Yes. Why do you notice that I have a point within the correction zone? Therefore, I expect the market to rebound from here, and thus I can determine point C, which the market will reach through the Fibonacci extension. Okay, now this is the second example. Wrong example. I'm going to draw my Fibonacci retracement like this. Is this the correct SK sequence? No, why? Because point B never reached or even touched our retracement point. It starts from 50% to 66.70%. What I want from you now is to open the beach and practice identifying the correct and incorrect SK sequence. And that's the gist of this section. I don't want to bore you with any more of it. I just want you to learn this mistake so you never make it again. Before we delve deeper into the SK strategy, this learning method that I'm adopting will help you master this strategy, God willing. As usual, let the segment reach 100 likes, and I'll see you in the next episode.